It's Monday, the 8th of November 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Global share markets are on a tear, though the local bourse still has some way to catch up. That's our main story. Also this morning, the Reserve Bank ups its forecast for the local economy, businesses get frustrated with border closures, and a $2.8 billion bid for Link Group. Then stay listening for Sean's chat to Hugh Selby-Smith from Talaria Capital about investing in overseas stocks. But first, Sean, US and European share markets are hitting record levels, but the S&P ASX 200 still remains below its peak back in mid-August. Why exactly are global markets doing so well at the moment?
Well, you're right, Michael. Developed markets are certainly on a tear. And that really matters if you have superannuation, which we all do, because there's more super money invested in overseas equities than local equities. Strong global markets should make a difference to your super account. Even if you're an individual investor, you should be looking at overseas funds to diversify. That's why we care. Now, on Wall Street, the S&P 500 finished last week higher, making it 5 positive weeks in a row. That's the longest streak since the middle of last year. The tech-heavy Nasdaq rose for the 10th straight day. The Dow Jones Industrial Average also ended higher. All 3 major indices ended the week at records. Quite incredible. London's FTSE 100 finished at a 21-month high over the weekend, driven by gains in energy stocks, and that reflects the higher oil prices we're seeing. The German market is at a record level. The French market is at a record level. The Italian stocks are at 13-year highs. Now, helping US and European stocks has been a strong earnings season across both regions, and central bank commentary from the Federal Reserve in the US, the European Central Bank, and the Bank of England that have been somewhat less enthusiastic about lifting rates than many market watchers had expected.
Okay, so then if US and European markets are soaring, why then is the Aussie market still a couple of percent below its peak?
Well, it's really struggled to make headway. Uncertainty over COVID is a big part of that, COVID and lockdowns. Supply constraints, fears of higher input costs, they've all weighed on the market. And remember, the local reopening in New South Wales, the ACT and Victoria is really a couple of months behind Europe and the US. But there was some positive action at the end of last week. That's the good news. The S&P ASX 200 rose 0.4% on Friday to finish at 7,457 points, capping a pretty good 5 sessions where the bourse ended almost 2% higher than where it started. It broke out of that range trading it had been in. Expectations of higher interest rates helped the banks, that's with a notable exception there. Westpac did dreadfully last week. But when the local banks do well, the ASX tends to do well. I say expectations because the Reserve Bank of Australia has been less enthusiastic than many market economists about the bounce back in the local economy, although on Friday it did up its economic forecasts.
Okay, I'm going to ask you to do the impossible and try and predict where we're heading. What is next for global markets?
That is the impossible. It's a very good question, though. It's really interesting to note that European markets, along with the UK bourse, are relatively cheap compared to the US market. Wall Street is so dominated by the big tech stocks nowadays. We're talking about Microsoft, Facebook, aka Meta, Apple, Amazon, Netflix, and Alphabet, that those tech stocks really dictate returns in the US. Among investors, there's a sense that their best days might be behind, and there's also a sense that after a decade of underperformance against the US, it might just be Europe's turn.
You mentioned the local market finished well last week. What about the dollar and commodities?
Well, the Aussie dollar starts the week trading at just under 74 US cents. Oil prices are trading above 82 US dollars a barrel. That's after jumping a bit over the weekend. And the price of gold is strong. It's back above 1,800 US dollars an ounce.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, in the lead story this morning, you mentioned the Reserve Bank. On Friday, it released its statement on monetary policy. What did it tell us?
Well, the statement confirmed that the central bank was more upbeat than it was about a month ago. It expects a rapid economic recovery and has lifted its growth forecast to 3% for this year, then 5.5% for next year before returning back to around 2.5% in 2023, which is actually the long-term trend rate. The Reserve Bank said growth is expected to have contracted about 2.5% during the September quarter. We knew that was going to happen. The jobless rate is anticipated to be a little below 5% by the end of this year, before dropping to 4% by the end of 2023. The Reserve Bank expects underlying inflation, which is all important, to gradually pick up over the next couple of years as the economy recovers and spare capacity is absorbed. Critically, the bank said the board's central scenario is the first cash rate increase will occur in 2024, though it said a move in 2023 could be warranted if conditions changed. That's a slight alteration to what it has been saying. The Reserve Bank said the board dismissed raising interest rates in 2022, which some market economists had predicted based on the latest data and forecasts. Now, that didn't stop Commonwealth Bank following Westpac's lead late last week in lifting fixed-term mortgage rates, which are actually priced off market interest rates, which have already risen.
Now, Sean, it feels like we've talked about this on many occasions in recent months, but businesses are getting really frustrated about what's happening with border reopenings.
They sure are, and fair enough too. Qantas Chief Executive Alan Joyce on Friday called for consistency between the reopening plans of states and territories, saying erratic testing and quarantine mandates for travellers would frustrate the COVID-19 recovery, at least in terms of travelling. He was speaking at Qantas's AGM, and he said each time borders closed over the past 18 months, different states had different rules. What he's really worried about is that the same thing is happening as states reopen. He really has a point in that. State border openings and closings is a hodgepodge of decision-making at the moment. Victoria and New South Wales are open to each other and fully vaccinated international arrivals. Queensland says that until vaccination rates hit 90%, it will need a negative COVID-19 test taken 3 days before entry from all travellers, and that doesn't matter where you're coming from, internationally or locally. Western Australia on Friday announced it would reopen to the rest of the country once 90% of its eligible population was vaccinated. That won't happen until 2022. Only fully vaccinated people will be let in, and they'll still have to submit to pre-departure and post-arrival testing. It is a mess.
It is. Though I do think the term hodgepodge should be used a lot more. So thank you for bringing that one into Fear and Greed this morning.
You're welcome.
Now, what were case numbers like over the weekend?
They're still fairly well contained. There were 244 new cases in New South Wales yesterday and one death. Almost 90% of the state is now fully vaccinated, and there's further easing of restrictions from today. Businesses can move to 1 person per 2 square metre rule. There'll be no limits on the number of people allowed in homes or at outdoor gatherings and a bunch of other things. Of course, if you're not vaccinated, you can't take advantage of the changes. Victoria yesterday announced a $150 voucher for diners in central Melbourne to help kickstart the economy. The state recorded 1,173 new cases yesterday and 9 deaths. The ACT reported 13 cases, and it has a vaccination rate of over 94%. Extraordinary. There are also protests in New South Wales and Victoria about the vaccination rules, though nothing like what we saw a couple of months ago.
No, it feels like things are starting to settle down a little bit now. Now, Sean, it's been about a week, I think, since the last multi-billion-dollar takeover bid, which in 2021 is a very long time.
Sure is.
But there was another one on Friday.
Yes, Carlyle Asia Partners made a $2.8 billion bid for Link Group, the superannuation administrator. It's the second bid Carlyle has made and is valued at $5.38 a share. The bid it made last year in conjunction with Pacific Equity Partners was actually more than that. It was $5.40 a share, and that one was not back. Notwithstanding this one is lower, it's still a 25% premium to Thursday's closing price of Link Group. There's two parts to the Link business, a 42.8% stake in electronic conveyancing business PEXA, and the second part is the rest of the administration operations. Now, Link has been a really poor performer, particularly since that first bid, but a share price jump of more than 8.5% on Friday took it to $4.70. Now, that's still well below the offer price, which suggests that many shareholders don't think the board will accept it. The Link board said it was considering the offer.
Okay, Sean, what's making headlines in today's news media?
Well, Michael, the Financial Review is reporting that resources, healthcare, agriculture, infrastructure and engineering will be among the industries prioritised to fill skill shortages as the Morrison government plots a return of foreign workers by Christmas. The Fin is also reporting a strong weekend for auctions, with more than 3/4 of the 3,276 homes on the block changing hands. Sydney's weekly auction totals have risen by 50% since the lockdown ended almost a month ago. And several media outlets are reporting this morning that an IFM-led consortium will take over Sydney Airport, having convinced the board of the country's largest infrastructure asset to agree to its $32 billion bid.
Running through some of the other stories around today, Virgin Australia has pledged to reach net zero carbon emissions by 2050, matching Qantas. While the airline industry accounts for just over 2% of global emissions, that's likely to jump as traffic increases. Virgin Chief Executive Jane Herdlicker said the airline didn't have a choice and sustainable aviation fuels were an essential piece of the puzzle.
In Victorian state politics, controversial senior Victorian Liberal MP Tim Smith yesterday said he'd quit politics at the next state election after pressure to stand down following a drink-driving incident last weekend. He's already resigned as Shadow Attorney-General and has now succumbed to pressure to leave politics.
The buy now, pay later wars are heating up after Commonwealth Bank's offering Step Pay said it will offer retailers a 4% bonus to switch over to them over the Christmas period. Commonwealth Bank says it makes their offering cheaper for retailers. It's a pretty aggressive move and one that I can't imagine Afterpay and Zipco and the rest of them are going to take lying down.
No, you wouldn't think so. News Corp's share price closed up 7% on Friday after the media giant reported a very strong September quarter. Revenue was up, earnings were higher, and the group flagged a $1 billion share buyback. The Dow Jones business achieved stronger profitability than any first quarter in the group's 140-year history. Chief Executive Robert Thomson said digital real estate services were another highlight. Now, the REA Group, which is majority owned by News Corp and part of the digital real estate services, said it had delivered revenue growth of 22% during the September quarter, despite the lockdowns in the ACT, New South Wales and Victoria. That in itself triggered a more than 5% jump in REA's share price.
And Sigma Pharmaceutical has dropped its bid for Australian pharmaceutical industries, meaning Wesfarmers is getting closer to buying the drug wholesaler and retailer. Sigma said it decided it wasn't pivotal to own the business. From Wesfarmers' point of view, it gives them an entry point into the pharmaceutical market. Remember, Sigma and API are arch rivals in the industry, so Sigma dropping its bid probably avoids a headache for the competition watchdog as well. Now, Sean, what's the key overseas news this morning?
Well, the UN Climate Change Summit continues in Glasgow. More than 100,000 people protested in the centre of the city over the weekend about a lack of action taken by world leaders. Activist Greta Thunberg declared the climate summit a PR event. By the end of this week, we should have a clear view of the communique from the summit, which will provide a pathway in coming years for emissions reduction, or at least that's what we're all hoping. The US economy added more than 500,000 jobs last month as the effect of coronavirus fades on the world's biggest economy. The unemployment rate fell to 4.6%. President Joe Biden said that the US economy is recovering faster and stronger than expected. In fact, it was a pretty good weekend for the president, particularly after his poor showing at COP26 in Glasgow and in an election in Virginia during last week. Mr. Biden, over the weekend, managed to get through his $1 trillion infrastructure bill, including gaining some support from Republicans. And finally, Michael, Pfizer said in trials its COVID-19 pill reduced hospitalizations and deaths in high-risk patients by 89%. The remarkably strong results have the potential to change how the disease is treated, and Pfizer's share price jumped 11% on Wall Street over the weekend. Pfizer will submit its findings to health regulators in the US shortly, but prescribing a tablet for people with COVID will be a total game changer in how the disease is treated.
Yeah, that's pretty incredible. Okay, up next is the Daily Interview, and today, Sean, you're speaking to Hugh Selby-Smith from Talaria Capital.
Very timely given the overseas markets at the moment. His fund specialises in investing in large overseas stocks. We went through how he thinks about those investments and some of his favourite picks.
Yeah, some interesting stocks that he picks out there, some things that you don't really consider. So definitely worth having a listen. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Also, don't forget to check out The Week Ahead featuring our resident economist, Stephen Koukoulas. It's a good chat today, really looking ahead to the labour force data out this week. And while you're there, have a listen to the Sunday edition. It is unlike any of our other podcasts. We get into the lighter side of business news and have a few laughs. It is a bit of fun. Thank you very much, Sean.
Thank you, Michael. Enjoy your day.
It's Monday, the 8th of November, 2021. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook, and sign up for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.